Hey everybody, happy Friday. Welcome back. It is 9 o'clock on the 6th. We just had non-farm payroll drop. Wanted to look at that and everything else with you. Let's take a look. So we had non-farm payroll, a couple of things. Forecast was 164, came in 142, so we had a miss there. The revision was a 114 down to 89. Ooh, even worse than when that SOM rule triggered back in July. We had unemployment rate, which ticked down 1/10 of 1%, forecasted 4.2. Again, SOM rule triggered at 4.3. So still, pretty somewhat elevated from the. I think we're at like a 16-month low of 3.4%, and 4.2 is where we're sitting. So we have had 0.9. This was a 0.9% increase, and we're still at a 0.8% increase in unemployment. So certainly trending, I guess you could argue, in the wrong direction. So let me show all that here. And then we had an average hourly earnings print forecasted 0.3, came in 0.4. CAD numbers pretty rough. Well, actually, that's surprisingly accurate for what they do most of the time, which is they forecast 23.7. It comes in either 150,000 or negative 100,000. So they got it just about right, which is kind of rare. But their unemployment did tick up to 6.6. They also did cut rates this week. Let's go into the charts. Bring up the chat. Good morning to everybody. Gary, good morning. Keith, good morning. Justin, good morning. David, Sean, good morning. Good morning. And happy Friday. And it's nice to be back in the home office. So we have the reaction here to the upside. I do have some chart alarms that I'm looking to see. I was stacking up some long puts on MES. I would like to see them continue to play out. We will see. So we've had about a 2% pullback, if I'm not mistaken. So from high to low, we're looking at about a 3.65% pullback just off of that September 1st high. Well, I guess it's September. It's this week, Tuesday, right? Which would have been the 4th, the 3rd. So September 3rd high, right after that August 30th push. So September 3rd high down about 3.65% on the futures market. S&P, a little bit less price action to deal with, but we have this high to low around 3% on the S&P. We go to the Nasdaq just in the last couple of days. Here is your push up from, let's see, Thursday, Wednesday, Tuesday. So Tuesday sell off to the lows around 3.29%. The Dow also turned this week, Thursday, Wednesday, Tuesday, holiday from last week. So let's just go Tuesday to now. About a 2.16% correction on the Dow. The Russell down to 211, and correction around 3.7, 3.8% on the Russell. Volatility index remains a little bit elevated in the red, below 20 for right now, but still pretty elevated. We will see how this plays out next week. Inflation data is next week. We have CPI data and PPI data that would be going into, I think, Wednesday, Thursday. Let's go next week here. So Wednesday, we have U.S. core CPI month over month and year over year. We're forecasting, well, that's a big forecast to the downside. 2.6 expected. 2.9 was the previous print. That would put us at, let me go into inflation data here. Let's go year over year CPI. So if we take a look at where we have been, let me see how far back I can go. Let's go 20. I'm going to try to go back into like the 90s if I can, or early 2000s. Let's go 10 years back. All right, VIX up a little bit. Let's see. Moreno, good morning. Nice to see you. Chris, good morning. Willard, good morning. And Mr. Welsh, good morning. Let's see, SVXY, still holding some puts, sold some puts, bought some shares at 40. Dollar index coming back to retest the lows. Possibly another opportunity if you're looking for support to hold. I mean, it's mostly for a buy low with a tight stop loss. I mean, I would say maybe half to one daily trading range on the DXY. I wouldn't necessarily say like the stop loss is right there. That's easy to hunt for liquidity. So if it was a buy trade, looking for making sure price doesn't either one close below this or two go like maybe half to one ATR past this. And we'll see if this level holds and then works its way back up into the range. There's pretty good structure back here around 102.50 to 10300. And I just think there's a little asymmetry there where if we're, looking to buy here, you're looking at a little bit of risk and then reward back into like 102.50 to 103. That's a pretty good setup on the dollar index. Howard, good morning. Nice to see you. So still lingering around this support zone, hasn't broken yet. To me, I see these 102.50 to the 103 pullback zones. We do have some inefficiencies on the dollar. I would say right in there around that 103, 104 structure in here that, in my opinion, and I think I posted a video on this week, I want to see the dollar stay below 103. If I'm going to be a bear on the dollar, I'd like to kind of sell it off a 103 rejection and then look to see if we get back down to 101 or 100.50 or possibly lower. Fed starts cutting, the probability is still pretty high. I know this week with the market, leaking a little bit lower. Here's an example. We're sitting here at 55.12 on the futures feed for the S&P. We're looking to see if this pushes a little bit lower. I've got some like 54.35 and 54.10 butterflies, and I want to see if those actually going to play out today. We go to dynamic trends here and load up and see where these gamma levels are at today. We will be, so the big level I see on the S&P is around 545. That's pre-market. I'll show you that right here. So pre-market right around there. Looking at a gap fill, same spot. So if we fill that gap at 545, doesn't mean that this is necessarily the direction today. But if we have, the reaction kind of early in, it does look like the market's trying to push up for a slight pre-market gap higher. Not by much, about 30 cents. I could see that getting faded pretty aggressively. SPY volume profile, we have some current price is kind of around some dead zones. I could see us pushing down towards this 545 handle. That's where my alarm is set. That's where this gap would be filled. And also this structure, we had a lot of support right around this 540 handle. So I've mentioned these levels, 545, 540 right in here. And if we're really talking kind of round numbers or even equidistant numbers, 545, 540, 535, kind of these $5 increments. That would be where the bulls would have to defend. If the bulls aren't stepping in here on the SPY by 535, we have possibly bigger problems ahead, and that could be something like this, where we just go sideways and we're dealing with a lot of volatility here for a couple of months. To be determined. But I don't think the market has the catalyst to get to the highs, and we may also not have the catalyst to get to the lows. So I don't know, just expect the market to be, pretty volatile, possibly pretty choppy in here. So picking my battles closely, trying to, pin some prices, get some income plays. Also hedging, of course. So MES is what I'm basically using for hedges right now. Hedging to the downside, hedging to the upside. I'm near term on the hedge to the downside. So these expirations are November 15th. And then my highs, if we're going to get a rip to the all-time highs, those are out to March of next year. Okay. All right. Let's keep whipping through some charts here. So DXY turning bullish. Let's go currency strength for the morning. Oops, that's not currency strength. There we go. Currency strength overnight looks like we had some risk off flows. Dollar Dollar was somewhere in the middle. Dollar jumping around here. Yen is also quite volatile. The Swiss was up a little bit, but the yen pretty volatile this morning with some yen strength. Let's check on the Nikkei and Japanese yen futures. So here is the Nikkei down on the day. Here's Japanese yen futures. Interesting. Pushing up here, this is 1, 2, 3, 4 days in a row of bullishness on the Japanese yen. Now, again, chart alarm is set here for a reason. If we break these highs, this is more of that carry trade discussion, this deleveraging that we saw, ripping through August 1st, 2nd, and 5th. Even, look, the Japanese yen got stronger middle of July. So for everyone to say, like, it all happened in the weekend, I mean, we had a 2-day drop in the Nikkei that was the biggest ever, 17.5%, with a total rout of about 27%. But I have a chart alarm set to see, are we actually breaking higher? Is the Japanese yen getting stronger? And how does that translate into currency pairs? So Aussie yen, we talked about some of these pullback levels. How many traders out there are currently, short Aussie yen, CAD yen, Swiss yen? The one trade I'm still in is Swiss yen right here. So putting on some positions to see, are we heading, down to a symmetry point? I may end up taking profit here in the near term. If we get back to this same low again, I might take some profit and then look to resell it and see if this is going to consolidate a little bit longer. And I'm hoping we just end up going lower. But I have some stacked orders, entry 1, entry 2, entry 3, stop loss above. That is my plan on the Swiss franc to the downside. But if we take a look at all these currency pairs, Aussie yen has turned nicely. That was probably around a 382, maybe a 50. Let me check that. So let's go high to low right there. That was exactly a 50 turn on the Aussie yen. Impressive. And a nice, daily candle to the downside as well. So if anybody is short Aussie yen, that is working out pretty nicely with a bit of confirmation. Not a bad spot. And CAD yen, same thing. This one looked like it turned a little bit earlier. I don't know if this one got up to a 50 pullback, but let's find out. This one is right around a 38% pullback. Swiss yen, also a shallow pullback. Okay, so high to low. This one should have been less than a 50 pullback. High to low, just above the 382 level. Let's go euro yen. That should be similar to the Swiss yen. High to low, right around that 382 pullback zone. Pound yen, high to low. So, I mean, you're seeing the similarities here. The Japanese yen basket does trade across the board. It does react pretty similarly. Here's another 382 just between the 382 and 50 pullback zone. Just keep in mind, I mean, if you are short on this currency, where's the stop loss? Either you're trading super, super small with a stop loss above the swing high, and you're basically embracing the entire swing with whatever risk you're comfortable with, maybe 1%, maybe 2%. But I wouldn't be surprised if we go high to low, push up here, we form a higher low, we pull back one more time, set up into that like deeper 50, 618, 786 pullback zone, then we have the bigger swing. This might take more time to pull back, but not do any damage between the high and the low. So just be prepared for this. This may not be the full-on breakdown. This may not be the full-on deleveraging. The Nikkei might catch some footing here if I go back to the Nikkei feed. So having a 3 or 4 day drop, we might see this Nikkei high and low, same type of thing, where we go pull back here, and then we try to fight back, and we might make a slightly higher high, pull back in some of these gaps, but we don't break the highs, we don't break the lows, and then we start to drop over here. But it may actually take a while to break above or below on the Nikkei. It might take a while to break highs or lows on the S&P and the US markets as well. So that's kind of my near-term outlook is, trade accordingly. I think that the bigger swing makes some sense. I mean, we put in such a substantial high to low that if you're willing to embrace this area as, okay, we shouldn't go above this, we shouldn't go below this, or rather this swing has taken out all these structure lows. Now we're looking to see that the bears at some point, the bears are looking to take the control back to these lows or lower. So I do think that a stop loss area above these highs is pretty convincing, but it might be a messy area at first to deal with some volatility and indecision before we actually see that turn further south. Okay. All right, so just some thoughts there on the Nikkei, how it's behaving, how the Japanese yen is behaving. I'm watching Japanese yen futures along with those currency pairs. If the Japanese yen futures breaks the high here around 0.007, watching that closely. I'm still long with a 2026 long call on FXY. I also own some shares of FXY around $58. So shares are up a little bit. And I think my break even is around $60 because I put in a hedge like 58 by 50, a bear put spread as a hedge just in case the Japanese yen got super weak. Let me check my, let's see here, CRM in the money, CrowdStrike. These expired today. I'm going to see if I can get some partial profit here. Nvidia should still be profitable. Hopefully it is. I need it to stay below 112 for a full profit today. Lululemon, 245 by 250, looking to see if I can scrap some partial profits together. So today's expirations, I'll take a look at that. Here's my FXY. So I do have 100 shares of FXY. It is up around $600, and then I have my 58 by 50, which is a hedge, which is down right now, but that's fine. I'm still going after the long shares plus the long call at 70. That's out to, oh, that's only out to January. Okay. So I think it's because I closed out my calendar spread or diagonal spread early for profit. So I'm sitting on the shares of FXY looking for additional strength in the Japanese yen. That's one way to play it. I could go out a little bit more on the futures market, but FXY I think looks pretty good. If we're going to have a rip to the upside, this might be a bullish pattern where we haven't quite put in a high yet that changes any structure. But if this is some type of head and shoulders trade, there's still some recovery. If we get it, great. I'm looking to take some profit here between, I own the shares around $60. If I get out around 72 to 74, I consider that a decent win. Sid, you asking for majors like majors in Forex? So dollar crosses primarily? Yeah, we can go through those. Let me just take a look at a couple other things. The one thing that did happen this week, the inverted yield curve is no longer inverted. We are disinverted. So the 10-year and the 2-year have come out of that inversion, and it's not necessarily if everyone's familiar with the the inverted yield curve is often a sign of recession, but it's not necessarily that the inverted yield curve causes it. It's the disinversion, and that's what just happened this week. So you can see that the 10-year yield is 3.72, the 2-year yield is at 3.7. You can see that has affected bond prices. We're trading 99.57 on bonds. So if we're going to continue to see yield drop, and having softer labor markets like we had today is probably a bit more convincing on the Fed Watch tool that we're going to see rate cuts. And we know this is coming. We've seen the higher probabilities for several months now. But you've got to be kidding me. Okay, this just changed from yesterday. So I had a travel week and I was in Florida. I looked at this yesterday. It was 61% favoring that 25 basis points cut. And here we are talking about 50-50 now, 53 to 47. This is a 25 basis points cut, and this is a 50 basis points cut. So the story changes once again. The Fed is, I would say, a high probability is going to cut, right? And I say that because 53 and 47 adds up to 100%, and that 100% is not a pause. The 100% is it's either 25 basis points cut or 50 basis points cut. Again, I think that if the Fed cuts 50 basis points, I do think that this performance-wise, I just feel like if we're cutting more than expected, it can't be taken super well by the market because it shows that the Fed has misstepped. It shows that the Fed has miscalculated. It shows the Fed was waiting too long. So I do wonder the initial, if this is officially happening, how is the market taking it? So far the market's not loving the move to the downside to kick off September. Obviously, cutting 50 basis points helps the consumer in the financing the financing ways of, hey, you want to buy a house, let's drop basis or let's drop mortgage rates by 0.5%. So maybe your 30-year goes from 6.35 down to 5.8, 5.85. And there's more to come, of course, if we look at the watch tool out for a couple more months. September, whether it's 25 or 50 basis points. November, another 25 or 50 basis points is on the table. December, another 25 or 50 basis points on the table. I mean, just based on this forecasting, probability says, and I'd say higher probability is that we're going to be sitting at 4.25 or 4% by the end of the year with the Fed. So remember, we're sitting at 5.25 to 5.5. That's the window. And if we're sitting in this 4 to 4.25, that's slashing over 100 basis points. Okay. And that's just to kick things off. And then we have a whole new year of when's the Fed going to cut, how often they're going to cut. Usually they cut 4 times. If they're going to be on a cut cycle, I don't see 1, 2, 3, 4, 5, 6, 7, 8. I don't see 8 cuts. If they did, that's crazy because that would be, 25 basis points on each cut. I doubt that's going to happen. More than likely, we would see a Q1, Q2, Q3, Q4 cut. The nice thing about this tool today is you look at this. This now goes out to December 25, meaning December of 2025. And we're looking at a forecasted rate by the Fed. Holy shnikes, all the way down to 3% or 2.75%. So quite a bit different. Where initially we were expecting the Fed to be around 3.25, maybe 3.5. Now we're looking at a sub 3% Fed cash rate. We of course have to wonder, like, where's inflation at year over year? Is it low twos? Are we getting sub 2% inflation? Probably not. But if we have a restricted monetary policy, or we have a slightly elevated 10-year note, but inflation is manageable. We're going to find out, but this will change a lot for the fixed income market. That no longer will you see, certificates of deposit, money market instruments, high yield savings, anything around that 4.5 to 5.5%. That's going to go bye-bye in the next 6 to 12 months because you're getting, 1%, 1.5% slashed, and potentially out a year and a half, you're seeing almost a 2.5% drop. So that's pretty substantial when you think about it. That's an aggressively dovish Fed. Is that the right way to say it? Or I should say extremely dovish Fed if we're getting that many cuts. So good stuff. All right, so we'll keep an eye on that. We're about 7 minutes away from opening bell. Happened to look at everything this morning. I'll be watching my pre-market levels. 545 is the level I'm watching on the SPY right now. Let's get into some majors as requested. Sure. Give me some currency pairs if you want. If you're talking Forex, we can go dollar pairs. Aussie dollar. Let's go in here. So I still see Aussie dollar as a bit indecisive, forming some lower highs, higher lows. I do like the open space on the Aussie dollar. If we can get above this area, I do like long Aussie dollar. And that would be, long with stop losses fairly tight and looking to see if this open space will break. But that dollar index hasn't done that yet. Dollar index hasn't really making a clean break for it. Aussie dollar, we could still be in a lot of indecision here before we have a major push or a major trend. The nice thing is, when we're ready, if you just see this chart for what it is, if you are patient in here, we will get a big trade one way or the other. If we have a risk on rally, if we see the Fed turn it into a really extreme dovish stance for the next 16 months, then it may be more likely seeing higher highs in the currencies against the dollar. The dollar gets hit pretty hard. We do see the DXY go below 100, getting into the maybe mid 90s, maybe 94, 95 is where I have some symmetry on that dollar swing. But to do that, I think Aussie dollar is pretty straightforward. If we get an open space breakout, I will trade this, not put a stop loss way the heck down here, but trade a breakout, look at a recent high or low, and then trade the open space up into these highs or measure this move. If we have a low to high here, we look at symmetry, either target one or symmetry up here. So I think between like 71 and 7,300, that would be a nice breakout target on the Aussie dollar if we can see it actually break out. Euro dollar. Watching closely on this one as well. Initially, I don't love these patterns on currency pairs, but same type of thing. We've had a pretty clean breakout. If we just hang out here but don't do any major damage to the downside, any type of fresh break to the upside, stop loss below, and then looking to see if this euro dollar can chew back into this 114 zone. There's some nice pockets back in here. I also like this structure all the way back towards 116. So we're talking about price around 111, 110. We can get some open space trading on a weaker dollar. Euro dollar could head up another 3, 4, 500 pips. Not a bad spot there. If that all convincingly breaks lower, I mean, what would I have to see? If the euro dollar all of a sudden breaks all the way back down here, then looking for a reversal pattern, trade it back into this choppy zone. Stop losses above that 112 handle. But to me, with this breakout, I would be looking more for right now. Just let it chop around, let it go sideways, look for a fresh break, look for more pressure to the upside, and then stop losses below a turn. So I think pressure remains on the dollar to get weaker, and we'll figure that out. Pound dollar sitting at these highs. I was actually looking for a turning point in the dollar somewhere in here. I took a little scalp on the pound dollar to the downside that closed out for some quick profit, like maybe 70 pips or so, at maybe just shy of 100 pips. But I'm watching to see if I zoom in. I'm looking to see if we have a turning point where this came all the way back to these highs. Is there some type of pattern up here that gives me a chance to short the pound dollar? Because this run up was pretty inefficient. But we have been making higher lows. And if this is if we're just going to continue to go up, maybe we have a channel and there's still some hesitation here, but there's still more upside into the mid 130s. So again, base it on the dollar. If we don't see the dollar getting stronger, pound dollar probably has more room to run. I look at a round number like 140 on the pound dollar. So I'll keep an eye on that one. It's probably not my favorite. I think the euro dollar has a better setup than the pound dollar right now. New Zealand dollar. New Zealand dollar, another one that I think has some promise and some open space, but something like this, where it's pretty indecisive. And so I'm not convinced that this is the full-on breakout yet. I think that we have to see some open space, and then we'll see if we can trend, get to these highs, plot the low to high, plot the symmetry. This is a nice little inefficiency area back around 66, 6,700. So again, if we have some open space traded up into symmetry, I like this zone. We might have 300 to 400 pips to work with if we plot that low to high, higher low to higher high, possibly into that 67 to 6,800 zone as well. But not super convincing yet. So I'm watching the dollar closely, and we'll probably take some stabs when the dollar shows me a bit more confirmation. It's close. Dollar CAD, it did what I needed it to do, which was I leveled into the dollar CAD. I took it back to this pocket right here. That happened actually on Tuesday. That big sell-off day in the market, we had this big rip right to the upside, hit my profit target, and I'm done with this currency pair right now. But I could see this, pulling back a little bit more, pulling back into this area here, and then looking for the dollar CAD to head lower. So this to me is a pretty good swing where we took out all these previous lows, right? Take out all these lows, swing here. Let's say that we pull back a little bit, but we run into all this past support becoming resistance. And if that's the case, I would like to see a turn high to low, maybe a 38250 zone somewhere in here. So I see the dollar CAD as a pretty nice swing opportunity somewhere in here. Surprisingly, oil's been hit pretty darn hard. And let's go to oil for a second. Oil's at 69.75, starting to stabilize a little bit. If oil's going to show some strength, that might help the CAD a little bit. And dollar CAD, I still like this to the downside. So overall, we're still in this big range on the dollar CAD. I think the BOC cut this week to 4.25. But if the BOC is going to be, less, I suppose, less dovish, or they're cut and they're happy, they might just. Oh, I just got filled on CrowdStrike. Okay, good. All right, so initially the market's gapping up a little bit. Let's see, non-farm payroll. Let me go real time. NZD will fall in the following 9 days. Well, Shanks has a pretty good outlook, huh? I mean, I see the dollar index getting stronger in the near term. So I think the near term does show some dollar strength, at least back into this kind of 102 to 102.50 zone. But what I'm watching for in the bigger picture is, getting through September and getting some type of traction through, October, November. Obviously, we have to navigate. Once we get through this, so this week was employment data, next week's inflation data. The week after that's going to be the Fed and all these central banks at the same time. Get through September, and then October, November, December, typically the market still has traction to the upside. we're going to see if that's the case. For the market to go higher and broader assets to go higher in a bull market rally or some type of melt up, I do think the dollar has to get weaker. So let me have a look here. All right, so that's dollar CAD. Dollar Swiss. Dollar Swiss actually retested that August 5th bottom. To me, I mean, this currency pair it's still something I'm willing to invest in small. Initially, I thought we had a potential head and shoulders, and this would be a deep right shoulder, but we are now in it. I guess technically it still is. We're so close to the lows, but we haven't hit the lows yet. So if we hit the lows, is this a double bottom? Is this still something that can turn back up and give us a range trade back to 92? Is this still something that can be a double bottom that then breaks out and doubles that move back to parity at 1.01 or 1.02? Possibly. I'm still dollar cost averaging very small, but like 84s and 82s and 8,000s on the dollar METC. I don't know what that is, but I'll check a chart alarm. Ramaco Resources 9.97. Okay, let me check one thing really quickly here. So SPX trade for today. See if we can just chill this morning for a little bit. Let's look at a 16 delta here. 85. Look at a 16 delta here. 40. Let's see if price will just chill out for a second. So I got 440 credit. See if I get 445. Okay. That filled. Try to get 4.60. Filled at 460. All right. So putting in a real quick trade. So 9.6. Current price, we're centered around this 55.10 to 55.15. So I'm at 55.65 and 54.60. Collected 4.60, which means my profit target 4.6 times 70 cents, which puts me at 3.9. Okay. All right, so let me get this trade in really quickly. So there's my September 6th, 1, 2, 3, 4, close, 3.9. I'll go 3.9. And 4.45. 66 minus 4.45. So 380. 1, 2, 3, 4. Okay, couple positions in there. Directionally for the day, I still have a bigger gamma level down here around 316. Or I'm sorry, 316 is my net size, but 545 is my bigger gamma level that I'm seeing. These may fill up a little bit. We obviously are starting out the first few minutes of the morning, gapping higher a little bit, a bit of a bullish reaction, but this starts to fade, then we should be looking at maybe coming back to retest yesterday's close or retest the lows of the week. 545 would be the gamma level I'm watching for. So I'm going to see how that decays over the next maybe 30 to 60 minutes. Okay. So let's see here. Earnings wise this week, a couple things I wanted to address. I do have crowd. Let's see here. Let me go to my expiration. So if I go all my accounts, let's go days to expiration. So Lululemon managing a trade today. Um, this one didn't close or did close. Hang on a second. Let me check this account. So this one I still have 100 shares, bear call spread, $90 put, and that filled. Oh, I got to sign the other. You turds! I got to sign the other shares. So let me close this one out. So close. Let's go 289.99. All right, that should fill. And let me see if these other ones should have closed out. This is so annoying. Yeah, so my Lulu here closed out. How do I not have buying power in this one? Did I get assigned something else? Oh my gosh, you freaking turds. CrowdStrike, I have it sitting there. Yes, that didn't close out yet. All right. So what I'm looking at here is I had a credit spread. This is during an earnings play. So, CrowdStrike was here. Let me change the color. CrowdStrike was here. I did an in the money bull put spread, an in the money bear call spread, and price reacted to the downside. So the broker assigned me uh, long shares up here, but I still have my long put, which is going to help me hedge out that position and take on the initial risk. The issue is I'm not getting filled at the break even point that I want. So I'm still willing to take the small loss. I collected like $1.75 per side, so this was $1.75, which means I'm risking about 75 cents. I'm risking 75 cents. And I want to take that 75-cent loss, and on this side, looking to make $1.75 to wash the two and take a net profit. I'm hoping to get this resolved by today because it's expiration today. But if I go into, let's go 0 DTE. So Lululemon, I don't have any shares here, but I'm looking to see if price will get down below 245. It doesn't look like it's going to, so I might be taking a loss here. This is and here's the issue, right? I see a mid price at 535, and I have a $5 spread, so it's actually trading beyond what my max loss should be. So I'm not going to do anything right now, other than let it expire worthless. And then CrowdStrike, same thing. This one has shares. I'm trying to close the shares out at that break even point at 285. And then I have a 247. Let me take this one here, 247.50 by 250, and close that one out. This maxes out at a 250 loss, is trading at 248. I'm just going to let it do its thing. If we push down today and get to those levels, so be it. Next up on the 0DT front, I have a couple of things here. So I do have some butterflies. 54.10 was a pin price. 54.35 was a pin price. I have a broken wing butterfly. These are long puts at 46 that are just slightly upside down. I'm out a few more weeks on this one, but that's it for the ES feed. NQ, this is, I've got some profit running. This is a naked put that expires today, worth about $1,100 on everyone's account. I have a hedge on that as well. That was a long put at 17.9. That's out of the money, so I'm going to take a small loss. But that naked put right here is going to help offset. I also had a bear call spread or bear put spread rather, that was in profit on the NQ. Nvidia, we're at 105 today. I have a bunch of it's 112 by 113. I think at this stage I'm just going to let it expire worthless and collect the full credit, which would be about 75 cents profit on 3 contracts. CRM, just credit spreads. Let me see if I can get one account here for CRM. 1, 2. Trading at $1.77. I collected about $1.70. Actually $1.80 or so. Fudge, this spread is pretty wide. I'm just going to let it marinate for the day. All right, so I got to monitor those on my end. What else do we have here? Qs. Qs. I have a 478 by 458. Ah, this is finally some volatility that I was looking for. Good. So this should be profit. This was the September 6th four-way trade. If I close this one out, I got into this trade for a 1090 debit. I'm going to close it out for 18 bucks right now. Let's see if I can get filled. Let's go 1790. Oh, come on, you freaking turds. All right, I'll take 1750. It's still like $7 a profit. Filled at 1786. Very nice. Okay, here, let's go Qs. 1, 2, 3, 4. Close. 1750. Good. Okay, that one filled at 86. I'm just going to get these all taken care of now. This is QQQ. 1, 2, 3, 4. Close. 1750. 1765 close. Very nice. So I'm grabbing like $6.5, $7 of credit on this. Overall, that's pretty good profit. 1, 2, 3, 4. 17.50. I'm just going to try to keep it. It's filling me around 1760. 1766 is fine. 1, 2, 3, 4. Close. 1750. Okay, it filled at 52. 1, 2, 3, 4. Come on, 50, fill me. Okay, that's not going to work. Let's replace that. Let's go 17.25. Filling. 1, 2, 3, 4. And hopefully this isn't boring for anybody. This is just real trading and just closing out some positions that I'm protecting some good profit here. So 1, 2, 3, 4. Sounds like I have like OCD. 17.20. Oh my, there we go. 20 filled. Okay. So that was a 1090. That was a 1090 debit filled for on the low end 1720, which is 630 a contract. So about 630 bucks a contract. And then on the high side, 1780 or so. So 1090 minus 17.80. So 690 a contract. 600. So 630, 690 bucks a contract. Not too bad. Let me take a look at the SPY trade as well. So if I'm back to 0 DTE, I've got my SPY trade here. I want to take a look at all those. Pfizer trading at 28.72. Today is an expiration at 29. It may not get called away. Let's take a look at my SPY position here. So Q's closed out. Very good. That was a nice win, 1766. Let's go to the SPY. Hopefully it's here. And I had a 562 by 542. This one should have covered the cost of my trade. Let's see what it's trading for. 1188. I got in for 860. So absolutely I can get out of this trade for a couple of bucks. So let's go 1170. Filled. Very nice. So I'm taking about $3 of profit there as well. SPY 1, 2, 3, 4. Let's go 1150 here. Filled at 1150. Okay, I'm going to try to get 1150. 1, 2, 3, 4. Try to grab 1150 again. 65 got filled. Good. So I'm getting a slightly better fill now, which is not disappointing at all. Close. 1160 fill. Very nice. And 1, 2, 3, 4. Let's go back to 1140. See if I can get 1150 on just a push up to that mid. 1172. All right, I'll take that too. Don't mind if I do. 1, 2, 3, 4. Now at $12. Yeah, give me some of that. 1190. Okay, not gonna fill me at 1190. Let's try 11. I'll try 1150. Should be filled favorably. 1172. I'll take that. 1, 2, 3, 4. 1150. 1150 fill. And 1, 2, 3, 4. Let's go 1160 here. Oh, come on. 1150 should fill. Come on, you can do it. 1140. Nope. 1120. Come on. Filled 1140. All right, that's fine. Okay, so that was another one that just got filled for profit. That was a 861 debit, filled for 1140 on the low side for 279 a contract, or on the high side, like 11 and change, 1190 minus the 8.60, so 330 a contract. So yeah, pretty good. I mean, between the two, that's around $1,000 a contract, which I'm fairly happy with. That takes care of a lot of my 0 DTEs if I just go to all accounts here. So I need to manage. I don't know why that's being weird. Let's go 0 DTE. So that means that Lulu, I'm going to have to monitor, CrowdStrike monitor, ESFeed monitor, NQ monitor, NVIDIA. This one should be full profit today. Right now it's up around $5,500, so I'm looking to just have it expire as long as we stay below 112, which I'll be watching that. As long as we stay below 112 today, I should be in good shape for NVIDIA to give me full profit on that credit spread. CRM, I need to monitor that one. I want to see if we actually push down below 240, 250. Pfizer is the $29. It's a diagonal spread, so I have a 25 by 29. I did lower the cost basis. This gave me an extra like $380. So if it gets called away today, I don't know. If we get up to 29, that's fine. I'll make, like right now it's up around $11,200. And if I have to put on another, sell trade against my $25 call and I do it for next week, get another 25 to 35 cents. I'll lower the cost basis even more. That's fine. I do have some partial shares of Pfizer as well at 52. One account has more. That's me. And then SPX. These are some hedges. And I'm going to keep an eye on this one. I've got some butterflies as well. Let's see. Those are individuals. Yeah, that's the strangle trade that I took this morning. That should be nearing some profit here. I collected 460. It's trading down to $3. This might fill maybe in the next couple minutes while we're live. I need about another 15 to 20 cent decay on this. That'll be a quick grab as well. And then Chewy is a 0 DTE. I have the shares. What else do I have on Chewy? September 6th is a naked put. Is that what that is? Oh, that was a hedge. That was an earnings hedge for like 20 cents. I bought. Yeah, it was 26 cents. So I bought a put. It's, I lost $52 on it, but overall I'm still up on the shares, and I'm looking at a covered call at 37.50. So I'm still going to sit on Chewy for some longer term gains, but that should take care of what is expiring today. But I need to keep an eye on those other stocks: Lulu, CrowdStrike, CRM. But nice gains on the SPY and the Qs. Nice volatility to have that all balance out. So I'll take it. All right. That was just maintenance on my end. Any other charts, any other requests? I am going to be jumping into the session this morning with A1 Trading. It's been a travel week, so I've been kind of out of the out of the routine a little bit, but all for good reasons. And anything else you'd like me to take a look at today? If you want to come back in at the top of the hour, you can come back into my channel here, youtube.com/Chris Pulver, and I'll run another session. I'm going to be tag teaming that session with A1 Trading, and looking forward to that. So let's see where we're at for the day. Like I had mentioned, looking to see if price is going to make its way down to 545 today. That wouldn't be a huge surprise. I'm loving this kind of chop for the first little bit of trading this morning. So some indecision. This is exactly what I want to see. And we'll see if we just hang out here for another maybe 5 to 10 minutes. And that should be some profit on the SPX. But we're flat on the day, choppy. And let's see what this position looks like right now. Let's go trade. Oops. SPX. There it is. Currently trading around $4, and hopefully will decay just a smidge more. Give me another 10 cents. So it's at 390, 397. I need a 390 debit. Come on, broker. Do your thing. 388. Let's go. Fill my mid. Okay, just give me a little bit more chop. And then also on my MES hedges, let me take a look at those really quickly. And if you have any other charts, throw them in the chat for me. We're at 55.09. I also want to take a look at a butterfly spread. So we're still red on the day. And if we can push back down towards those levels, I wouldn't be upset by that. I also have a butterfly spread on ES. Let me show that one here. So I have two butterfly spreads. It's the 54.35, which is the closest one to current price. I did a 40 wide, so 75 and 95. Here's what that trade looks like. So current price, see that flag? That's current price. If somehow we fall on the day and we come into my profit trap, then this is a max of about $150 loss with a reward of about $1,500. I put it out there. Mechanically, I was looking to pay less than 10% of the spread, so it's a trade. It was a nice kind of solid liquidity level, but it's a tough trade to pin every time. I just want to see if price is going to accurately kind of go into that profit trap if it does. Okay, so we'll keep an eye on that one for today as well. That was a trade on ES. And then my SPX trade should be getting pretty close to some profit here. We're still trading around $4. All right, just give me some love there. Another 10 cents a decay would be just fine. Euro pound leisure. Let's take a look at that. Well, I do have a trade on the euro pound. It's a swing trade. Let's see. This is the daily time frame. I bought the euro pound right there at a pullback zone. So I'm willing to take the euro pound into this level. So here, instead of putting a stop loss below, I'd actually rather do this. I took the trade pretty small. So if I have trade 1, I'm willing to take a trade 2 down here and then look for a break even or better. That would be my immediate plan. So what I look at here in the euro pound is we are approaching some pretty serious support that goes back to 2020. Probably approaches some levels that we saw back during Brexit. Yep, I was going to say Brexit right in here. So Brexit level support all the way over. And I took a swing trade that was entry 1. So I'm going to turn this into an entry 2. So I have 1, 2, space out the distance. That's my break-even point. If we bounce here and offer some profit, that's all I'm really looking for is a little bit of profit. That's it. So that's my thoughts. Support levels around 8,300. Could it go a little bit deeper? Sure. 83 to 82, I would say major support. If you're not in a trade on the euro pound, I like this 83 to 82 zone, looking for a decent bounce there. And that should do the trick. So that's my thoughts there. All right, let's do this. I am going to wrap it up here just a few minutes early. And let's jump into the next session in 5 minutes. So come back into the channel. I'll jump in and I'll dual stream with A1 Trading and pop in and see what's going on with those guys for the week. Okay. All right. Thanks for being with me today. And I'll see y'all in about 5 minutes. Just come back to the channel. All right. Thanks.